G'day traders, Stacey Burke from Stacey Burke Trading today, talking about start hunting the money, consolidation stop hunt, the basic pattern that happens in each of the 3 sessions and over the course of our trading week. This is the basic model that applies to each and every session, and depending on where we're at in our Monday to Friday template, this can provide traders the most powerful insight once they grasp this simple concept of why you don't need to be on the screen, of when you can come to the screen at certain times, look for very basic setups. And again, as I mentioned in previous videos, my entire focus is primarily on gold, and you'll see why, because this pattern shows up over and over again, and this coincides with the bigger picture, but this setup is what I use to identify my best trade setups. So we want to know, where is the money? That is the first thing I look at, is where is the money? Where are stop orders and profitable trades? That gives me some insight into when I go to the screen and the market moves in a certain direction. So again, instead of trying to participate or guess a direction in a 50-50 scenario, I want the market, the smart money, the institutions, whatever, to show me their hand first. I know that they are going to move the market. Now we'll look at some setups from this week. We'll talk again about the 3-day setup and how all of this ties in together, but it's understanding that you don't need to be sitting at the screen all the time. The market is going to do certain things that will entice the retail market into trades that essentially do not go anywhere, because they pull the market into consolidation. And then as the next session begins to move in our 12 candle window. So just to clarify again, the 12 candle window, the 4-hour boxes, it's just an understanding of how time frames overlap and who is getting caught into the market. But for simplicity's sake, today's video hopefully will land home the simple understanding of going after the money. There will be a high or a low put in place. There may already be a high and low put in place, depending on which session you are trading. If you're coming to the screen in Asia for gold, again, there may be an existing profitable trade. There may be a trade already in process. But when the day starts, they will put a high or a low or both in place. There will be existing profitable trades with trend and with counter trend. So understanding that there may be a counter trend, the trend may be down for all intensive purposes, but they will lock in a low of the day or a low of the session that potentially may be in profit, maybe 25, maybe 50 pips, heading into the next session or the next day, and the market will perform a stop hunt and a trade. That is the nature of why they're there. Remember what we talked about. The nature of markets is to take money from the take money from the many and give it to the few. And in order for them to do that, they have to move it and trap the largest amount of traders on the wrong side in order for them to liquidate their open positions with losses, transferring money from one account into another. Zero-sum game. Then the market will go back into consolidation. So I want you to just understand these 2 lines right here. There will be a stop hunt and a trade, and then the market will go back into consolidation. We're going to look at some textbook examples on gold of how this works and why you do not need to be sitting at the screen. Once they have performed this, they're going to go into consolidation. If you're already in an existing trade and it's not moving, then you most likely are in a consolidation or a mid-move pause. These behaviors coincide with the equity market opens and closes. So again, we talk about the 12 candle window. The 12 candle window is about the highest probability timing of executing the best trade setups based on how the market behaves. So again, coming back to knowing that they are going to move the market. If you're trading one instrument all the time out of the major pairs, you may not get a good trade setup each and every day, which is why I mentioned in the previous video about the 3-day setup. I look at the major pairs over the course of 3 days, 3-day cycles. And ideally, I like to see a high of the week, low of the week trade opportunity to the other side, either low of the week, high of the day, low of the week, high of the week, high of the week, low of the day, any of those scenarios that can offer 25 to 50 pips in a fast, hard move. After the stop hunt and the trade, they repeat the process to set up the next consolidation inside of the high and low area before repeating the same behaviors. So obviously this is exempting the trend day when the market is in a move, and usually we'll see that at the beginning of a new week or second, third day into a week when they're reversing the market from one side of the week into the other. So we may have taken out a previous week's low and they may be trending. So it may be an all-in day, which again, even in an all-in day, there will be a stop hunt back into the trend. Typically, this movement will start in the first hour with some variation. So again, depending on the days of the week and the template that we're in, I'll just fix this. The 12 candle window, again, to review the timings of that, is 8 to 11 p.m. for Asia, 2 to 5 a.m. for London, 8 to 11 p.m. for New York. Now that is New York Eastern Standard Time. Now you'll notice I have a number 1 and a number 7 prior to New York Eastern Standard Time. And again, I've talked about the stop hunt hour previously. And again, depending on if we are at the high or low of the week, we may see the markets move in that earlier hour. So again, if we've taken out the low of a day and the low of a week, we may see a reversal in this hour prior to the 12 candle window, and vice versa for the London session. High of the week opportunity, they may extend it out even further in a push out of Asia's high, only to reverse the market at the high of the week, and London locks in the high and starts reversing its way back, and again off the low of the week. Depends on the weekly cycle and the days of the week and where we are at in that overall structure in the month. So first thing I look for is a 1, 2, 3 in very different variations. So again, that we talk about like each session, and we'll show some examples in gold. Prior to the 12 candle window, I want to see the market initiate a high or a low, or already be in movement, as we'll look at again this week. We've seen examples of all these different types of variations. But it's understanding that you're looking at a minimum of 45 minutes once the market starts to pulse and move in one direction. So if you feel like you've missed what you consider to be the trade, most likely you haven't missed a thing. Again, in your head, you need to understand timing and think to yourself, you're looking for that 1, 2, 3 type of setup. It may be 5 bars. It may be an hour and 15 minutes. So again, understanding that next hour, the first 15-minute candle may extend even further in the wrong direction before reversing. And this all comes back to understanding and watching how price behaves when it gets to levels, either taking out highs or lows or into profitable existing trades, or putting in peak formation highs and lows. This 1, 2, 3 setup could be a reversal, a stop hunt for a trend trade, or even the beginning of a new trend. The first day of a new trend, we may get a 1, 2, 3 at the beginning of a move without taking out a previous day's high or low, before locking in a peak formation reversal and exploding in that middle hour or the beginning of a 12 candle window if we're inside for a all-in trending type day. So this is the basic template, but combining this understanding with a 3-day setup, and again, understanding the importance of being on the outsides, not getting caught on the inside, avoiding the consolidation. The big moves come out of the consolidation. So you can be in a stop hunt near a high or a creeping trend near a high, coming out of a consolidation, but that may be the stop hunt for the reversal, 50, 75, whatever, in the opposite direction. So again, identifying what your best trade setups are with edge, and then using this information to identify and execute on the best setups. Coming back to what we talked about last day, trading less, making more. Start hunting the money. So just to comment on a comment a trader made mention about my last video in terms of trading less and making more, about risk of ruin, which is a great point to make. But Never in that video did I say to over risk on your best trade setups. The point of the best trade setups was to come to the realization, instead of trading trades that are mediocre and 50-50 and rationalizing that with you're going to win some, you're going to lose some, and over time you've got an edge, start to focus on the trade setups that explode in one direction, and there's a reason for that, because it is a stop hunt or a reversal, squeeze, whatever you want to call it. But never did I mention about over-risking or over-leveraging. The point is that there are plenty of those trades. It's about hunting those trade setups, and then through execution and accomplishing the profitable results, scaling those up in size, not over-leveraging them in size, not blowing your account out because you're wrong and you put too much size on. It's about focusing on the best trade setups. So let's take a look at those. So we'll look at gold. Again, we're going to look at a couple of the other major pairs. But just to emphasize the importance of understanding, again, just highlight the beginning of the week. And just for today's purpose, we'll even get rid of this daily high-low. Coming back to Monday. So we start the week again. We have Friday's high and low, and we're inside. But you'll notice the behavior of Monday in a lot of cases, especially on gold, if we do not take out a level. So again, the first thing we talk about, I mentioned in that first slide, was the market, you'll notice, has come off the bottom. But don't confuse this pullback inside of a large bar as a peak formation. This price action, this bearish price action, we'll blow this up, is inside of that large bull candle. So this is all still inside. It has not formed a peak formation. Same thing into the rollover. But what do we have at the beginning of the day? And we'll just, for simplicity's sake, we'll put in the 12 candle window to show traders that, the timing. So we get a 1, 2, 3 prior to our 12 candle window starting. But then our 12 candle window starts, and again, we still don't have a peak formation in place. This is all just an extension up. But then the market in our 12 candle window gives us a 1 bar, okay, which at this stage is nothing. But then we get a second bar, which again, we're still inside of price action. And then a third bar into the end of the hour. So again, I'm not going into smaller time frames on this, but we talk about identifying our 50 pip box. Okay, so again, at this stage, we have a peak formation that's put in place between 50 and 00. Okay, we also have traders that have shorted the previous night's U.S. session 4-hour close. But this 1, 2, 3 pattern into the move is what I'm looking for. I'm looking at my number levels. It's Monday. This is almost 50 pips from top to bottom. And in one explosive move, the market takes out the high, pushes a second time and a third time before locking in a high of the day. Now, again, this is why sometimes on gold, traders find it difficult to trade, which is why on this particular setup, I'm looking for an entry that's confirmed on a smaller time frame off the numbers at the beginning of the new hour. We have our 1, 2, 3. Very powerful pattern. We have a 1, 2, 3 up. This reversal is not the trade I am looking for. This reversal is what's giving me confirmation that they have put a high in place as I head into the next session. So some traders have shorted this, saying, I shorted it and the trade, came back and stopped me out or whatever. I'm looking at this as the original trade. Okay, so the market's moved up 75 pips, which you've heard me say before. Typically, on average, the Asian range for gold is 75 pips. But what's important is that they have locked in a high of the day. When we come into our next session, what I want to look for now is the move down into the breakout trade. Did they consolidate and move down in the gap time? No, they came back up into the peak formation high with 1 push, 2 pushes, a third push, and again, understanding the timing window, this is the hour prior, near the high of the week at this stage. It's a Monday, and then we get our little bear doji at round numbers at 50. So we know that there's stops at the low of the day. Okay, and if you've been trading gold long enough, you can go back as far as you want. You're going to see that gold doesn't let anybody out of the market with a free lunch. And you have to understand, somebody bought the close of this 15-minute bar. So at any stage, a close back below that close, once they've pulled into the peak formation, this trader is locked in. They're in loss at this stage. We have higher level longs with stops below these bars, and the market drops down and proceeds to go into consolidation at the middle of this 50 pip box before bursting down through, hitting stops. And you'll notice also that this pin extends down far enough, doesn't go all the way in, but it goes far enough to obviously where it needed to go to stop out the majority of most traders, which you'll see on these traders that have chased the 15-minute bull candles all the way up, have had all their lows taken out. But more importantly, again, just understanding that on a Monday, this is what establishes our range. So we have a high and low. Now they've come down and they've extended the low of the week. And we go into consolidation. Monday sets the high and the low for the week. We're inside of Friday's bar, and the market goes into consolidation. Right away into the opening of the next day, and again, we talked about this the other day. We had volume all trapped up above double zeros, 1 push, 2 push, 3 pushes, and then it failed, pulled back, broke the middle structure. So we have an existing short trade heading into the next day, which goes down to the low of the current week. We talked about this. So the market's running away. You think you've missed something. So we'll just talk about 1, 2, 3. So the market's come back up and 1, 2, 3 pushes back into the peak formation before blowing off and locking in a low. Comes back inside and 1, 2, 3 into traders that were short. 1, 2, 3 down into traders that are long. Okay? So understand, when you can count 3 bars and it hits stops, the reversal is imminent. Now, if it's a breakout, we may get a measured move. But Monday sets the high and the low. We go back into consolidation. 1, 2, 3 into the close. 1 push, 2 push, 3 pushes. 1, 2, 3 reversal. Start looking at these charts. So the market rolls over. It's running away without us. 1, 2, 3 down. The 12 candle window opens, and what do we get? 1, 2, 3. Round numbers. 50 pip box. Tuesday, day 2. They take out the low and extend the range down further. We get a low of the day and a low of the week extended down. Now, the reversal, again, we talked about this burst candle layering on top, and then we get a 1, 2, 3. So this is an example of understanding the variations, but this first candle at the high is the beginning of a new hour. And then you'll notice we have 1 push, 2 pushes, 3 pushes into the peak of the high of Asia, into round numbers, double zeros, and then we get our engulfment heading into the last hour prior to the 12 candle window. So it's important to understand this is not hindsight trading. This is understanding. Hit the stops. 1, 2, 3. 1, 2, 3 against the trend. Hit the stops. Okay, reverse it. Hit the stops. Pull it back into consolidation. 3 pushes over that few hours. 1, 2, 3 down. Hit the stops. 4th bar, engulfment, inside. Now, you'll also, you need to understand that there's a really big reason why to confidently take this trade in the opposite direction. We're at the low of the week. They've already triggered yesterday's low. They've come back in 50 pips inside. So if you were short at the previous day's low and you were trading end of day, they've come back in 50 pips against you. That's probably enough for most retail traders to stop them out, unless they're trading so small that their stop is at the high of the day and it's 1% of their account, which means they either have a massive account and 1% is trivial to them, or they're trading so small that it's irrelevant and they're trading the inside bar break. So we have an inside bar. They've triggered the low of the inside bar after, again, coming back to understanding a massive coil that built up over the previous week. We talked about the day 0, and I measured that and showed it to traders. This market had a huge possibility of moving when it came out of that coil. So, but really important concept to grasp with this is that when they come down and hit the stops on traders that are long, do you notice they don't go much further in terms of the close past the previous day's low? And why is that? Because traders that are short at the break of that, they've pinned down, pulled it back, pinned down and pulled it back. They're not going to let them out with any profit. That's a stop hunt. We reverse with our engulfment. They come up and layer on top again, layering on the lower candles. The engulfment is on top of the lower candles for an explosive move because all this volume is trapped down low. And they go up and hit the high of the previous day. And again, same principle, they pin it. So count the bars. 1, 2, 3. 1, 2, 3, reversal. 1, 2, 3. 1, 2, 3, reversal. 1, 2, 3. They lock in the high, and the whole process starts again. Hit the stops, pull it back into consolidation, wait, hit the stops, pull it back into consolidation. We're in a bullish market. They've triggered longs. They've come down and put in a new low of the day. Okay? Why is that? Because they reversed it. They came up and made a peak formation low inside. They come down a second time. 1, 2, 3. Reverse the market. 1, 2, space 3. 1, 2, 3 down, engulfment. 1 push, 2 push, 3 pushes down. Okay? What that means is they're not letting out any of these traders that are short below. And there's a reason. If these people are holding on with a loss, they're not letting them out. We get 3 pushes down and a 1, 2, 3 into our middle equity hour and the engulfment reversal. They pin up and pull back, getting traders to second guess. Should I get out? Are they going to reverse this? What are they going to do before the explosion takes place of 100 pips straight up in 15 minutes? There was an engulfment on the 5-minute chart, getting traders filled at an even better price, and on the 1 minute there was a 33 off the bottom at 00. So it's about understanding the price action pattern. Hit the stops, pull it back into consolidation. Hit the stops, pull it back, continue the trend. We head into the next day's session. Again, the market sets a low of the day in place with our peak formation engulfment, getting the first mouse in before 1, 2, 3 down into the end of the hour. We're in an existing uptrend. They have not triggered yesterday's high yet. We have traders short at the close of the session. We got traders short at the beginning of the Asian session before the explosive. This was a pin bar on the 1 minute after a little W formation for an explosive move. That went 50 pips in 3 minutes and then obviously continued up another 50. And again, they lock in the high. So they move the market, and this is a trend trade. So again, I talk about 75 pips. This market obviously moved more than 75, but it's gone 3 levels once it started to take off above the peak formation, above 00s, up to 75 before locking it in with a peak formation high. This is the same pattern that we saw on Monday. Peak formation high, stop hunt back into the peak, 50 pips. Okay, so you can see the same behaviors over and over again. Timing, peak formation, stop hunt up or down. So they push into the peak formation and then 1, 2, little bar 3. Again, the first bar of the 12 candle window before reversing and engulfing for 50 pips up. They pull it back and they lock in the high. High bulls locked in, engulfed. They pull it back into consolidation. Beginning of our session window, 1, 2, doji 3. First bar engulfs, they pin down, and on the 1 minute, this was a peak formation stop hunt, reversal engulfment for 50 pips. 75 obviously from high to low, but a 50 pip vertical move, hitting the stops. Again, you'll notice little bull pin at the high, engulfment. They come down and clear out all the higher level lows. They go into consolidation, count the pushes, 1 push, 2 pushes, 3 pushes, 1, 2, 3, and a blow-off move. Creeping trends will end in one of two ways. So today we see the 3 pushes off the low of the session into the beginning of the day before the engulfment. 33, 1 push, 2 pushes, and then 1, 2, 3, engulfment. They lock in the high, but then the market proceeds to stop hunt down into the peak formation low from the U.S. close. But notice the bodies. The bodies are above the quarter level. They've pinned down below 25. The market goes into 25 and reverses. Creeping trend up. How this market behaves will either hit the stops and roll over into the high of today's session for possibly a move down, or we'll get a breakout pullback, 1, 2, 3, and a continuation to go after traders who were short into the blow-off move. So where is the money? Where are the profitable trades? We got traders that are short. Obviously, there's traders who could have got short anywhere in here, but the bear pin hammer takes off from just below 19,025. We have traders that are long off the bottom, but it's in a creeping trend. So traders have gone long, possibly if they're not long off the bottom on the smaller time frame, maybe taking this pin hammer for the follow-through. That trader, if this market breaks the high, would be considered to be going at break even. We'll just zoom on this a bit better. And obviously we have stops at the high of the day. Let's take a look at the euro. Just before we do that, let's come back just to again go and look at our 3-day cycle. 3-day cycle. So we have just really simple. This is such a beautiful pattern. I want to just go over the basic template. We talk about consolidation, stop hunt, hit the stops trend. Consolidation on Monday. We'll just lighten this pink one up again. Consolidation on Monday, high-low, they hit the stops, give us our W, they pull it back inside, breakout and trend, 1 push, 2 push, 3 pushes on Wednesday, third day of the week, we're back inside now, so we're inside in a consolidation. We're inside of the high and low of the week. So anything in here at this stage for me is 50-50, which is low probability. We may get a big move or a big setup later, but this is an example of where I'm not looking to have any particularly great size until the market confirms some kind of setup for me. Down here, absolutely. This is pure gold. Pure gold. There was trades down. There was trades up. There was trades back up on Tuesday. And yesterday there was trades up, trades down, and trades up and down, depending on how long and how much you're sitting at the screen. But these were all high of the day, low of the day, high of the week, low of the week setups. So just coming back to the 3-day cycle, looking at the week itself now, okay, we've hit the stops, we've expanded the range, we have a 300 pip range, give or take 50 pips, we've pulled it back inside. I need something to confirm either a retest of this high now, so breakout pullback, stop hunt continuation, or a failure, peak formation failure, and a continuation for a retest of the low of the week. At this stage, we have not taken out a previous day's higher low. So you'll notice the market took out its own low of the day yesterday, but this is not a low of a previous day or high of a previous day violated. We're just inside of yesterday's bar. Even though this potentially may be a peak formation high, peak formation low, and consolidation, I'd prefer that they work the low for a retest of that high, trapping traders trying to short this market. They've shorted it, 1 push. This is all 1 push down, 2 pushes down. We may get a 3rd push down, trapping traders inside for a triple bottom reversal and a retest back up to the high of the week. I thought the euro was a great 3rd-day trade setup yesterday. Again, the 3-day cycle, we broke out of Monday's range and the market pushed higher. Continued to move, and again, you'll notice the same pattern on the euro, a 1, 2, 3 down. Just prior to the Europe Open, 1, 2, 3, bullpen hammer engulfment for a 25 pip plus move up. The market continued to work the high and 1, 2, sideways, 3 bursts to the peak formation before reversing back in the US for a 25 pip stop hunt back into traders who were in the money. So again, where is the money? Heading into the US session, high of the week opportunity. They burst in 3 bursts in that last burst culminating at the beginning of the 12 candle window, a bear pin hammer after the stops have been hit. So traders, the most important thing to realize is that retail trading concepts, the technical analysis and all of that stuff is going to blind you to the best opportunities. This market does not work this way. I'm not telling you to throw it out the window. I'm trying to emphasize the importance of once they have cleared the money, the next most important place is where's the most recent higher level low. There's money there. They come down, they go sideways after pinning through and then engulf again and continue to move down. There's money sitting down here. 1, 2, 3 down, burst. 1, 2, 3 up, burst, consolidation, burst. Pull it back, go into consolidation. Hit the stops. Okay, so hit the stops on the upside, pull it back into consolidation. The whole day started like that. They went up and hit the stops. Went into consolidation, 1, 2, 3 down, continued to move. Pull it back into consolidation, work the high again, pull it back, work the high again, pull it back, go into consolidation, and work the low. Timings. This all happened in the US session 12 candle window. But we go into the next day at the high of the week. Okay, we have our lower high inside of the high of the week. So again, I'm up high. I want stops to get hit. We form a low of the day. They come back and hit the low of the day again in Asia before engulfing, going back up, hitting the high, working the high, and then what do we see at the high of the week on a Wednesday? We see a 1, 2, 3 engulfment heading into our Europe Open in the last hour of Asia, heading into the Europe Open. So again, understanding they don't have to take out the high. We're at the high already. We're at the high of the week already. This is a stop hunt into the trader that shorted the bear pin the previous day. The market falls fast and furious before consolidating and continuing to fall all the way back down, getting traders who were long and as well not quite getting there yet, but they went far enough to stop out probably 99% of the money. Day 1, day 2, day 3, and you'll notice 1 push, 2 pushes, 3 pushes, and then a stop hunt to the high with a 1, 2, 3. On the day itself, though, 1 push, 2 push, 3 pushes, 1, 2, 3, 33 trade at the high of the week. This is not hindsight. Okay, we talked about this in the last video. You're going to see the same setups. 1, 2, 3. This is a 1, 2, 3 on the 3-day cycle, and then a 1, 2, 3 at the high of the week in engulfment for a 50 pip move down. So as a good friend of mine said to me years ago, if you're selling at the high of the week on 1 bar stop, that's got to be my least riskiest place to trade if I have price action confirming a best trade setup where I can manage my risk the best, and I have asymmetrical risk reward, and I have a rationale and a logic behind why I'm taking that trade. So this is the sort of stuff that we're going to see again and again and again. So the pound was a little bit different. Again, I know that there was a possibility of the pound retesting the high of last week, but we came up out of our peak formation high, peak formation low, reverse pseudo head and shoulders for a stop hunt into the last swing high on Friday night before dropping down and pulling back and noticing a very similar head and shoulders type pattern on the Tuesday on the way down. So again, we have our low of the week and high of the week now, Monday, Tuesday. We head into Wednesday, just coming back to what we originally talked about, the 1, 2, 3, especially with London and Europe. Asia, not so much for the pound, but we get 1, 2, 3. London Open, that's the London hour, 1, 2, 3, inside bar reversal. We talked about this the other day. 3 pushes down, 1 push, 2 pushes, 1, 2, 3. Reversal. Back up. We go into the session rollover. The new day starts. Okay, they push up higher. Auction sideways, not quite down. We get a shortened W formation, ascending triangle. The market bursts out. Still haven't formed a high of the day yet. Continues to go higher. Eventually it forms a high of the day. We get a high of the day formation, high bull. But the market heading into our Europe-London 12 candle window bursts another 25 pips. So again, coming back to what we talked about, the original rationale was that this came out of a day zero scenario and it may have a strong possibility of trending. It bursts up in a 1, 2, 3 after going 25 pips. It engulfs. 1, 2, 3 down. 1, 2, 3 up, engulfment. So every time you can count a 1, 2, 3 on the 15-minute chart and stops have been hit, and we get an engulfment. If you're in a trade, be prepared for either that market to reverse, or if you're not in a trade, be looking to understand if there may be an opportunity. Hit the stops, pull it back into consolidation. Hit the stops. We may get a stop hunt in one direction and a stop hunt in the other direction, which in fact is still a 50 pip trade. It's all about how price behaves. The market comes down and clears out the stops into the end of the day, into the New York close, hit the stops. Our box is now 75 pips, give or take 10 pips, before pulling it back and going into consolidation. We're inside of the high-low, inside. The market, what does it do in Asia? Comes up and hits the stops as we head into our almost the end of the Asian session. They hit the stops. We're inside, so the only place we can work from is the high and low of the day. They engulf at the last hour of Asia before coming back and hitting the stops. 1, 2, 3 down, pull back, 1, 2, 3 down. That's an example of a measured move. So they've hit the stops, they drop at 1, 2, 3, there's a pullback, and they continue 1, 2, 3 down. Hit the stops. Now they've expanded the range, the basic pattern. We're inside of the high and low of the week, so we stick to the high and the low of the day. Let price confirm anything for us. Again, you'll notice that as we're targeting and expanding the range, our risk reward improves. So I'm not looking to trade this as an ideal trade setup, but my rationale behind any single move that I do is there been a stop on? What time is it? Did I get a 1, 2, 3? So this is at heading into the London Open. 1, 2, 3 down, engulfment. Pin bar on the 1 hour. This forms a pin bar on the 1 hour. What do? Come back straight up 25 plus pips. These aren't coming back. Even though this is not a best trade setup for me, this is still a trade setup that would have constituted taking a position. If had I seen fit, this is how I would have traded the market. I want to see stops get hit on a 1, 2, 3 and a reversal after stops have been hit in order for me to enter the market. Price action needs to confirm that. On gold, I look for the numbers, and I'm looking for at least 50 pips in terms of where it needs to go. Minimum. Usually it's 75. Great example. They pull it back, roll it over into the close. This is not a consolidation yet. This market has not put in a peak formation. This is still continuing down as the market's closing. They come back 1, 2, 3, down 1, 2, 3, and continue the move. Blows off to double zeros. We know that the pound loves double zeros. What do we see down here? We see a 3-bar reversal engulfment. This may now possibly be giving us a low of the week formation setup. We may see something come back down into this area for a stop hunt, revisit, and possibly reversal. This is not a trade recommendation. The first place we're going to retest is the high of the day. If they come up here first, we may see them work the high and roll over and continue down even lower. But if they come back down and work into the peak formation low, potentially either in the US gap time, whatever, we may see a peak formation low, and this now is giving us a middle structure somewhere for our lower high in terms of our reversal range if this market is going to reverse and come back up for a low of the week setup. So we have our Monday, Tuesday. They've taken out the low of last week. So we've got other time frame traders in the market. We've got yesterday's low taken out. And we potentially now have a peak formation that has started to form at the low of the day and the low of the week. Time will tell. But 1, 2, 3, consolidation, stop hunt, pull it back, sit inside now, wait for them to move the market. If the move is back into the peak formation, it may still be a trade, but it may also fail at that level or hit the stops, and there may be a reversal formation somewhere down there. 1, 2, 3, hit the stops, consolidation, reversal. If we get lower level highs, we could be in a measured move back up. If this market revisits into the peak formation highs, the sells could continue to make new lows. Hopefully you got value from today's video, traders. Start hunting the money. Don't sit at the screen. Wait for the timings. Look for the market to set up for you. Let price action confirm your entry. Manage your downside. Lock in profits, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.